Ahead of the new growing season, many American farmers could be forgiven for focusing their attention on Washington and the trade talks between China and the U.S. It's estimated the U.S. exported $20 billion worth of agricultural products to China in 2017. But those shipments fell dramatically last year, following retaliatory tariffs from China after the US levied import tariffs on a range of goods. That has contributed to a widening of the US trade deficit with China, reaching a new record high of $419.2 billion in 2018. But Professor Stephen Davis of the University of Chicago Booth School of Business does not feel the trade deficit is something the US should be overly concerned about.
You know, I'm not too worried about the trade deficit, frankly. I don't think it's the real issue. To some extent, that's the flip side of the United States and the US Treasury in particular being the world's largest supplier of safe liquid debt securities. What do we get for that? We get stuff. We get stuff like cars and goods and so on. That seems like a pretty good deal.
The trade deficit doesn't tell the full story. A host of US companies send raw materials to China for low-cost assembly. Once shipped back to the US, they are considered imports. But last year, US President Donald Trump promised to lower the trade deficit by imposing tariffs on a range of Chinese imports.
US farmers probably know more than most the difficulties caused by the various trade disputes. And although a trade deal with China won't necessarily resolve every issue in US agriculture, it could go some way to removing the uncertainty.
We need a lift from somewhere, and the lift is trade, and the lift is particularly, hopefully, China, as they would come in and be significant buyers long-term of corn, distillers, soybeans, pork, beef, dairy products. We thought when this started a year ago, we hoped that things would be quickly resolved. Well, we're a year down the runway now, and there's been billions of dollars of cost to agriculture. How much longer is what everybody out here is asking.
The trade dispute has hit a range of US industries. Exports of American liquor and spirits to China have grown from $959,000 in 2001 to $12.8 million in 2017. But Paul Hletko, founder of Fuse Spirits, a craft distillery based near Chicago, says that growth is now under threat.
You know, I personally have spent an awful lot of time, effort, and money overseas, working very hard to develop overseas markets, and the tariffs are not helping with that.
There is also the issue that even if the US lowers its trade deficit with China, it may not have the overall desired effect.
I think it's the wrong measure. And the bilateral trade deficit with China is particularly the wrong measure. Because if we do clamp down on imports from China, we might reduce the trade deficit with China, but we're just going to import things from other countries.
Historically, the US trade deficit has increased when the economy is doing well. Although there is some confusion as to the significance of a trade deficit, what is clear, the issue of tariffs is having a major impact on a range of industries in both the US and China. Dan Williams, CGTN, Polo, Illinois.